Google stock, or Alphabet, just reported their third quarter earnings, sending the stock down around 5-6% after hours. Yet for context, the stock is up significantly, around 50% year to date, on the prospect of this being a strong AI play. We'll talk about that dynamic in this video. If you enjoy educational investment content, you're watching Unrivaled Investing. I do appreciate that thumbs up, hit that subscribe button. So let's dive into Google's latest earnings, which I think it's a very solid earnings, very reasonable results, and yet the stock is selling off. Why is that? So we're going to talk about these dynamics and more. So let's dive into what's going on with Alphabet, because when you look at their results, you see 11% revenue growth, you see 28% profit margins, a huge increase in earnings per share. I mean, this reflects that management is doing what they said they would do, which is that they would manage their expenses, manage their investments while growing the business. And, a year ago when folks were more worried about a recession, I still think that's something that could happen in the future. But, when investors were more worried about a recession, you saw growth decelerating. Now you're seeing growth accelerating, and you're seeing them really get strong profit margins, seeing them leverage their operating expenses, showing improved profitability. I mean, going from $1.06 to $1.55 in earnings per share, this is strong growth that you're seeing in the underlying profitability. Same thing with operating profit, from $17 billion to $21 billion, along with solid growth, 11% growth for a huge company generating $77 billion in revenue. That's not an easy accomplishment. When you dive deeper into the individual pieces, you see their growth is pretty broad-based. You see Google Search and other Google products up around 11% year over year. YouTube ads accelerating to around 12% year-over-year growth. Their Google network, which works with independent third-party sites, that did decline a little bit. So that, I have mixed feelings on this, because this is lower margin revenue, I believe, than for their Google products themselves. So it's, investors don't really care as much, but I don't like to see a negative figure here. Does this mean they're losing market share? It does raise some questions. So overall, Google advertising growing around 10%. I suspect this is in line or faster than the broader advertising market. Looking at Google Other, which includes their YouTube subscription, their premium offerings, that's growing very nicely, around 20%. Google Cloud growing 20% plus, as management says, look, we're still taking market share. Other bets includes things like Waymo. Waymo is expected to launch in, more and more cities over time. That's growing nicely. So overall, very nice picture. You're seeing broad-based growth. You're seeing management broadly manage their costs, saying, hey, we're going to be reasonable with new hires. We're going to be reasonable with what we're investing in, and we expect to deliver better profitability over time. This isn't just a top-line growth story. This is a real free cash flow that they can use to reward shareholders. And they are rewarding shareholders with lots of buybacks. They announced, billions and billions of buybacks that they continue to do. So then the question is, well, if the results are so solid, why is the stock, getting hammered? What's going on here? So I think there's actually a couple of different things. And let's talk about that right now. First of all, when you looked at Microsoft's results, which also came out after the close, their cloud product, Azure, grew closer to 30%. And this is a really important data point, because Microsoft is working with OpenAI. For them to be bigger and growing faster than Google Cloud is a little bit of a warning. And so investors, I think that's part of the reason why it's selling off. I think investors are saying, wait a second, Google Cloud, GCP, was growing closer to 30% earlier this year. Now it's growing closer to 20%, while a bigger competitor is growing even faster than them. Does that mean that Microsoft's integration with OpenAI is resulting in them taking share faster than Google? Will Google see continued deceleration in their cloud business in the future? So that you do have that sort of uncertainty with the stock. And that's part of the reason why, despite very strong third quarter results, I think the stock is selling off after hours. So whether or not that's misplaced is up to you to think about. I'll continue. I'll share more of my thoughts towards the end. I think a second key component, this is something I've been talking about for several months now, and this was something that several investors asked about, was about the developments in generative AI with regards to their search platform. And this is really, you see this question over and over again, where investors are saying, well, can you talk about the return on investment for these generative AI? And, management's talking about SGE, which stands for their search generative business effectively. And they're saying look, they think they're going to generate attractive unit economics over time from these generative AI bets. And a very small percentage of users, I personally have opted in to try it out, to see like, hey, how is this search business actually, is this search experience better with the generative features that they're including? And I look at it, and this is the concern, is because when I use OpenAI's features, ChatGPT 4 layered in with, you can search the web. So it uses AI, and they've made it much faster. This is a competitive threat that didn't used to exist for Google. And I've talked about that before as a concern for Google, is like, well, wait a second, you have to do all these things with search to make it more competitive. Will this actually translate into better advertising revenue for this business? Because this is really an advertising play. And so if you are making these investments to make search more productive, will it actually result in more revenue, more profitability for the company, or does it just translate into more costs? You see that question over and over again on the call. That said, I don't think management gave a strong answer. They effectively were like, look, we're going to continue to make investments. We expect to generate and be the leader in various different AI models. And I think we're going to continue to see them launch new products. I mean, the truth is, OpenAI surprised them, jumped ahead of them in terms of the LLMs, the large language models that people can use. It's very impressive. And they've quickly, they've rolled out an API, so that way a lot of startups are using it. Google's sort of playing catch up here, and they're saying we will be as good as anyone else, maybe better in the future, but they're scrambling to do that. They've, in theory, they might announce their Gemini model. Maybe they see something next year. That's what they alluded to on the call. I think either way, the consumer wins, which is that you're going to see better and better models that you can use and interact with, generating really interesting pictures and generating interesting content and things that you can have real conversations with. So I think this is a really compelling revolution that they're going to participate in, but it's unclear. And I think management has made it unclear that they don't know for sure how this business model adapts or changes because of these changes. So where does Google stock go from here? First of all, in full disclosure, this is not financial advice. In full disclosure, I also do own a little bit of Google stock. I'll talk more about that later on in the video. Also, quick plug, at Unrivaled Investing, my goal is to help everyday investors by identifying companies with compelling long-term business prospects, attractive valuations, and aligned management teams. I'm looking for companies that I can partner with and hold for years with the prospect of hundreds of % upside. I share my investment journey in a weekly letter at unrivaledinvesting.com if you'd like to learn more. Once again, that's unrivaledinvesting.com. I look at Google, and this is just an incredible company. They have lots of cash on their balance sheet, $100 billion plus in cash and investments. They generate something like $80 billion in annual free cash flow, of which, if you're talking about a $1.7, $1.6 billion market cap, they're using to buy back stock. Now, some of that is stock-based compensation, so it sort of washes itself out. But still, you're looking at a business that can return or retire 4 to 5% of their shares each year. That certainly helps when you're thinking about this business. I mean, when you're looking at the logic, retire 4 to 5% a year, plus organic growth of maybe 5-10% plus. Now you're talking about an interesting return. Then maybe a little bit of valuation expansion, then you can get an even better return. So let's think about, where does it go from here? I check in with AI Ticker Chat, which is empowered by OpenAI's ChatGPT. Over time, it'll be powered by other AI models to say like, hey, where does Google potentially go from here? And it actually gives a very reasonable framework saying effectively over 100% upside over the next few years based on profit margins around where they've been the last few years, growth rates where they've been the last few years, and it's somewhere between a 20 and 30 times earnings multiple by the end of 2027. I personally think that this is a very reasonable framework. AI Ticker Chat is free for the first month. See the link below. And it now covers all U.S. stocks above $300 million market cap. So this is very exciting. Nearly all U.S. stocks above $300 million market cap. And so I applied through my own lens, thinking about Google, thinking about the different segments, looking at Google services, which includes their advertising business, as well as their YouTube subscription business, looking at Google Cloud, looking at their other bets, looking at their equity. And I think I'm very much aligned with what AI Ticker Chat was calling out, in terms of maybe 100% plus upside over the next 5 years, plus you get the cash return, to the tune of 4 to 5% a year with buybacks. And keep in mind, this is a hypothetical framework. Of course, the stock price can go way higher, way lower, but broadly, I do like the setup, the share counts going lower each year. And so I look at this and I say, this is very reasonable. Now, some people might say, well, Daniel, didn't you say like you weren't buying previously? Like my context, and this is what you could see with my subscribers at Unrivaled Investing, is that in December of 2022, I bought a little bit more Google stock around a little under $90 a share, but I was trimming it from like 105 to 124, just because one, it wasn't a large position for me. And second, I just thought that there could be better ideas out there. There could be cheaper ideas out there. And for example, in this week's letter, I'm actually going to cover a investment company, a closed-end investment company that has made Google one of their top positions. And yet this company owns Google stock. It's a large part of their portfolio. And yet this publicly traded vehicle trades, 30 to 40% below its liquidation value. So these are the types of things where, even though I think Google is very compelling, I think it's a very strong company, I'd rather, for my own personal investment journey, find things that are potentially even cheaper. And just to fill you in on what that company is, that's Pershing Square. But I'm not going to do a video here. I'm going to do a deeper dive and part of my weekly letter for my subscribers at Unrivaled Investing. Just to think about, okay, what's that mean potentially for investors over time if you get Google and some other assets, and potentially that re-rates over time. I look at Google and I've been very impressed with OpenAI, how fast they roll out new products. It is so very clear. I try to listen and read every interview that Sam Altman does, one of the founders of OpenAI, just to get an understanding of the roadmap ahead. It is so clear to me that AI, ChatGPT 4, is going to get better and better and better. And these platforms like AI Ticker Chat that leverages AI is going to get better and better and better. And the consumer's value proposition is going to be huge. It's just going to be, people are going to be shocked with what you're going to be able to do for how little money. I mean, like I'm oftentimes thinking about like what we're trying to do with AI Ticker Chat is help every investor research any stock, and every investor, there are different levels of expertise. But the goal is to say, hey, let's use artificial intelligence to analyze, what are the different ranges of outcome. And this is just a starting point where we are today. But it's so clear to me that as these models get better, the value proposition for the consumer is going to get better. And the fact is, you compare this to modern tools like a Bloomberg terminal for like hedge funds that charges thousands upon thousands of dollars. I think this is an example of a deflationary impact. AI could have a strong deflationary impact for consumers. I'm not even talking about the impact of robots and things like that. So the reason why this is important to understand, this isn't just ChatGPT or OpenAI, is because Google is going to be a very solid contender. But the question is, will they successfully monetize it? Will they, do they have the DNA to say, hey, we're going to roll this out in a really effective way to all these businesses? And that, I think, is the crux of why the stock is down today, following very solid earnings, is that you see Microsoft, and it is in their DNA to say, hey, we are not a leading company, but we oftentimes partner with or copy the companies that are, and then we catch up real quickly because it's in our DNA to sell. It's in our DNA to work with customers and work with merchants, work with businesses. And so that is the red flag for Google, where cloud is growing much slower for, GCP, 22% versus Microsoft's Azure, closer to 30%. Azure is bigger. And so folks are saying, oh man, is it possible that Microsoft runs with it and really starts dominating, really starts dominating AI through their partnership with OpenAI versus Google, where they sometimes struggle with the selling execution? So that's the question. I still own a little bit of Google. I might consider buying more for myself, but I'm also reviewing ideas that I think are cheaper. So, everyone has their different take on Google. I'd absolutely love to hear your thoughts in the comments below. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thank you so much for watching Unrivaled Investing.